This is the Real Estate Investing Abundance Podcast. I'm your host, Dr. Allen. I know you're excited to get into today's show, but I have a very exciting announcement to share with you before moving to the show. We've just launched a complimentary and comprehensive webinar that, among other things, shows you how to legally use passive real estate investing to reduce your taxes, recession-proof your nest egg, and take the sting out of inflation. If you are curious to learn more, go to stevetalker.com/webinar. It is complimentary and only takes a couple of minutes of your time. Once again, that is stevetalker.com/webinar. I'll see you in the webinar. Enjoy today's show. Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Allen. Thank you so much for being with us. And your presence here means so much to us. You are what make our show. Today, we are going to take a look at how we can invest like millionaires without being one. And with us today is Joshua Kagan, and he is the CEO of Bonfire and the father of Sophia Rose. And I hope he'll tell us a little bit more about Sophia Rose as we get into the program here. So Joshua, take us into the show and share a memorable experience that helped you to be who you are today.
Hey, Alan, thank you for having me. First of all, I'm a big fan of your show, and it's an honor to be here. I think for me, a memorable experience was in college. I spent my junior year abroad in Nepal. And it was sort of accidental that I even found this program. And I lived with a family with no electricity or running water, and they didn't speak a word of English. It was like coming from West Los Angeles. It was an experience like I've never had in my life before. But it taught me a number of things. One, that, at the time, Nepal was the second poorest country on earth, and yet these were among the kindest and happiest people I've ever met. So happiness really comes from within, and, resilience that I can sort of be thrown literally anywhere and find a way to find happiness and thrive.
Well, that is interesting. So they didn't speak English, and I don't guess you spoke their language. So how did you manage to?
Yeah. So it was a study abroad program in college. So we had like 5 hours a day of language class, and it was this deep immersion. So by the end, I wasn't fluent, but I was highly conversational.
Oh, yeah. Yeah. Well, cool. Well, those first few months must have been challenging to be sure.
For sure.
Well, yeah. So it was study abroad. Was it just the language you were studying, or?
No, I mean, it was ironically the sort of most intense and least academic of my 4 years in college, where we had like a cultural studies program, and I did an independent study project on a World Bank backed dam that was being constructed. But it wasn't terribly academic per se. It was more, just the experience of living somewhere that I otherwise would probably never have a chance to live, and kind of learn things about myself that I might not otherwise figure out.
Yeah, sounds wonderful. Yeah, we should all have experiences like that.
I agree.
I spent 2 weeks in Mexico without really knowing any of the language, and stayed with a family in Mexico as well, and they couldn't speak English either. So I know how challenging that can be. But I was only there for 2 weeks, not an entire semester. So Joshua, tell us about tokenization, and particularly tokenization in real estate.
Yeah, what I'd say is, we created Bonfire basically because my friends are in their 30s and 40s. They've done everything that society has told them to do: go to college, get a good job, get married, have 2.1 kids. And they're at the stage of their life where they would historically own real estate. And for most Americans, the biggest source of wealth we ever have is through the home we own. I know that was the case for my parents, my grandparents, and a lot of my friends. But unfortunately, younger people are owning real estate less and less compared to previous generations. And there's a myriad of reasons why that is, student debt being a big one, but interest rates close to 8% aren't helping either. And so I looked at that and said, well, okay, I can't solve the affordability crisis in America, but what would it look like to enable people to get on the real estate ownership ladder? How could we do that? And I met my co-founder, Vi. He came from India 10 years ago, started and sold 3 companies, including one for $200 million, and took a lot of his earnings and sprinkled it into real estate in the Bay as well, where he lives, and his native India. And he came about it from a different perspective. He's like, Joshua, I'm lazy. I don't want to have to vet deals and do due diligence. And I just want to be a passive investor. And I don't like funds. I don't like REITs, because that's not actually owning real estate. That's owning an investment to a corporation or some sort of partnership that owns, real estate, but it's not direct. I don't get the, you wouldn't get the direct tax benefits, et cetera. So we put our heads together and we're like, well, what technology would enable us to do this and also potentially provide liquidity for people in the future? And it was really clear that blockchain would be that technology. So I can explain how we use blockchain and what it is, if that's helpful, or however you want to take it, Alan.
Well, for my own benefit, I have a vague idea of what blockchain is, and I've talked with other tech people about blockchains, but it's still hard for me to visualize it and conceptualize what it really is. So, for my benefit, let's go through it again here.
Yeah. So I'm not a technologist, and I'm also dyslexic. So I run the risk of confusing all of us. But the way that I understand blockchain is it's basically like a ledger. And it's a piece of data that goes onto a ledger that's connected to another piece of data in a way that makes it computationally impossible to reverse. So it's like the most safe ledger that's ever existed before. And so you can trust the data that goes in, that there's integrity, that data hasn't been manipulated by others, is kind of how I think of it. And so taking a step back and you look at the way that real estate is transacted today, right? We have to go down to county assessor's offices, you need notaries, you need signatories, all these different entities just to transact. And there's all these third-party expenses and title insurance. Well, if you had a master ledger that people trusted, and that was the way in which information was recorded, you really wouldn't need a lot of these third parties, because the ledger, the blockchain, would serve as the ledger of truth, if you will. Now, with Bonfire, yes, all of our interests are recorded on blockchain. However, they're also recorded through traditional paper trails as well. So I don't feel like we're ready as a society to fully embrace digital assets. I think that there's clarity that we need from the Securities and Exchange Commission. So that's why Bonfire is doing kind of parallel records, both on blockchain as well as paper.
Just take us through a typical transaction from the acquisition to the sale of a property via the tokenization.
Yeah. I'm going to start off with a metaphor, and that is my co-founder, Brent Donaldson, who has spent his entire career in commercial real estate underwriting. He likens what we're doing as judo. And I'm not terribly familiar with martial arts, but judo is sort of taking other people's energy and using it kind of, using their energy with you. So that's how like 120-pound people can defeat 300-pound people. So what do I mean by that? What Bonfire does is we are an investor club. We're seeking 8 to 10 A-plus sponsors or real estate operators, people who have 10-year track records of under-promising and over-delivering, and who are consistently, targeting returns of about 15% per year from an IRR perspective. But we're not doing any ground-up construction, and we really want to make sure the downside is mitigated. So what happens is we have a stable of operators. And so we do a lot of due diligence on them. We do background checks. We do reference checks. Once we get comfortable that someone really is an expert in a niche or a sub-market, then we look at one of their projects. And when they have a project, we want to make sure that the downside is mitigated. We want to stress test all of their assumptions and make sure that exit cap rates, terminal interest rates, what they're using for rents, are really what the market can justify. Because to be honest, anyone can make a spreadsheet look really good and that you'll get 20% IRRs. But it's like we believe in trust but verify, So once we get comfortable that this really is a good project, and I can walk you through an example of a recent one, then what we do is we say to the sponsor, hey, we want to take an allocation as a limited partner in your project. We go out to our global community of investors, both US and international. We explain what the project is, and we ask people, do you want to invest? We provide a webinar with the sponsor, usually a lot of information on our platform, and then they can invest through our platform. It rolls up into an LLC. The LLC makes one investment into the project. And so for the sponsor, they're only dealing with one K1, one entity. Bonfire serves as the managing member. We don't take a promoter carry. And it's really, really simple syndication. But I think the difference between us and maybe some others out there is we're highly curated. We look at this $1.5 trillion of commercial real estate that's rolling over as one of the greatest opportunities of our lives if we're in with the right sponsors and we can find the right projects, because a lot of these, basically undercapitalized projects are either going to, have to give their keys back to the lender, and we're working on one of those right now, or they're going to need to come up with more equity. And so we have an opportunity to come in at a much more favorable basis than the people who came in maybe even 5 years ago. And so that's the kind of opportunity. And I can go into detail about a specific opportunity or however you want to take it, Alan, but just wanted to sort of give the high level on it.
So in the projects that you invest in, theoretically, there could be other investors outside of Bonfire. Is that correct? Because you are coming in as an LLC, as one investor, and potentially there could be others. I don't know how frequently that is, but if I get the picture correct, that is a possibility there, I guess.
Correct. So, Alan, right now we are coming in as an LP alongside other LPs. However, as we scale, once we get to a certain size, we're going to be more of a joint venture partner or even a co-GP. Mm-hmm. And that's where we'll get even better, discounts and terms for our community. Right. But right now, we're just laser focused on finding exceptional sponsors who have great projects that we feel comfortable both with the upside as well as the downside mitigations.
Mm-hmm. And so the sponsors you're working with could be mixing the traditional dollars with the tokenized dollars. And when you go into the project, are you taking tokens into that project, or are you taking the tokens and you're actually converting those to the dollar?
Yeah, let me clarify that, Alan. So 90% of our buyers invest in us through fiat, meaning US dollars, whether it's wire or ACH, kind of direct bank to bank participation. About 5 to 10% of our community buys through Bitcoin or Ethereum or stablecoin. And then what we do is we turn that into US dollars. We aggregate those dollars together and we wire it to the sponsor. The tokens, the only thing that tokenization currently adds is a record that lives on blockchain, which we can share with people. It doesn't add a lot of value. It's akin to being a unit or a share in an LLC. Where it could add value in the future is when we build a secondary marketplace for these LP interests. And if people want to exit the deal before it's seasoned, then it will be much easier to sell these tokenized interests, basically asset-backed securities, than it would be right now. But for all intents and purposes, all these tokens are units, they're shares in an LLC that's investing in a compelling piece of real estate.
And so since I have just not been trading in tokenization, so it still seems pretty far out there. But I like the concept, and of course, others that I have talked to, the tokenizations that they are using are actually tied directly to the dollar. It's not like Bitcoin that has its own life, essentially. The tokenizations that most real estate people are working with is the tokens are tied directly to the dollar. Is that how yours are working?
100%. Just think of the word token as synonymous with share, right? So our last project, it was $2,500 a share to get in, or a unit or a token. They're really synonyms for each other. As of right now, where we are in sort of the digital asset universe, tokens don't matter yet. They could in the future, but I feel like it confuses more people than it helps. So, we could just kind of think of a token as a share in an LLC that owns an asset.
Okey-doke. Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. So you say that in the future, you will be setting this up so that individuals can exit a project before it seasons. Are you there yet, or you're in the process of that? And what is keeping you from doing it at this point in time?
Yeah, we're not there yet for three important reasons. One is, in real estate, and this might be a controversial statement, but sometimes, time is your friend. Unless you're a flipper, getting in and out of like, I'll give you an example. We did we invested in a $60 million hotel repositioning project in Northern California, where 4 Points was the flag, and sponsor came in and was going to buy it and turn it into a 4-star Marriott. And it's like, we got a great buy on it, like phenomenal buy. So, and we're like 27% ahead of pro formas in the first 3 months. So it's like, it's going really well, but they haven't started the renovation yet. And the renovation is going to take a year. The hotel's not going to be shut down. They're going to do it wing by wing, but like the real alpha, the real returns will happen once we get RevPAR up and occupancy up, right? And that's going to take 2 years. So unless someone really needs to get out of the deal, and I know, and I realize that life circumstances sometimes cause that, right? Divorces, deaths, weddings, kids needing, going to school. Like there's reasons why people would need liquidity, but there's a case to staying in some of these deals more than a year, for instance. That's first. The second is a regulatory perspective. The SEC has not clarified what custodianship means of these digital tokens, in a digital asset era. And so I really am concerned by some of our competitors who are claiming that their tokens are liquid on day one. Like they are flaunting and violating the SEC's laws. And I worry for their investors that they're going to be subject to things like rescission, and they don't know what they're getting into. So we will never do anything without having clarity from the various government entities. Like we're completely above board. There's some cowboys out there who are, trying to get cute, but we don't operate that way. Yeah. And the third is we need an ATS license, which costs a lot of money, or we can borrow someone else's. But yeah, I'd say we're more, a year to 2 years away from this is my guess.
So what's an ATS license?
Alternative trading system. Okay. It's what enables us to be able to have, people buy and sell who are not necessarily accredited investors onto our platform.
Okay. Yeah, I don't think I've talked to anybody who who guarantees liquidity in less than a year, but there have been individuals I've talked to who do provide the liquidity after a year in the project. So is now a good time to be investing in commercial real estate?
Yes, with a caveat. The 10 year is about to hit 5% if it hasn't already today. And as I alluded earlier, there's $1.5 trillion of commercial real estate debt that's going to reset in the next 3 years, which is substantial. And so I think this is the time to be incredibly picky and opportunistic. It's like in 2008 when many people thought the world was ending and the sky was falling, and Warren Buffett was investing in Bank of America and Goldman Sachs, and everyone thought he was crazy. Well, turned out having a clear thesis and, what's the expression? Be fearful when people are greedy and greedy when people are fearful. And there's wisdom to that. So we think our strategy of just focusing on very, very highly curated, compelling projects that have significant downside mitigants, but also upside potential with no construction risk is kind of what the sweet spot is, and really targeting those distressed opportunities. So yes, and is what I guess the short answer to your question.
I think that yes, and is probably a good question for any time in real estate investing, no matter which direction the market may be going. Yeah. And I mean, you never know what the future is going to hold. And for the last year, everybody has been predicting recession. And then I was just reading something yesterday and go, no, there's not going to be a recession. So who knows? Right? What's that?
It's like, who knows? And I don't know if you read Howard Marks, the investor manager. He just came out with this memo that was wonderful. And he basically said the same thing. He's like, one of the things that I've learned in my career, and the guy has like 170 billion under management, is like you can never predict the future, and be wary of those who think that they can.
Oh. Good advice there. Yes. Like Yogi Berra said, prediction is very difficult, particularly when it's about the future. So.
Oh my God, Yogi.
Yes.
Baseball's what, 90% mental and the other half is physical?
Yeah. Yes. I loved his little sayings there.
Yeah.
Well, so how is Bonfire different from other platforms such as CrowdStreet?
Yeah, I would say that we're different in a number of ways. One is our business model. CrowdStreet and some of our other competitors charge the sponsors oftentimes a listing fee to be on their platform, and then a success fee. We don't do that. What we do is we say to our community, look, we're finding these sponsors, we're doing due diligence, we're doing background checks, we're walking the properties, we're finding exceptional opportunities for you, and we're taking a 1% to 3% upfront charge for that because we're providing a service that we think is really valuable. But we don't take it from the sponsor, because then I feel like we would be incentivized to put any project on our platform, regardless of the quality of it, right? So that's one very big difference. The second is curation. CrowdStreet just lost $63 million of their customers' money through this fiasco called this Nightingale project. And it's really heartbreaking on a lot of different levels. You never want to see anyone do poorly. Mm-hmm. And they didn't have a chain of escrow in place. And their first reaction to their customers was something like, well, you should have done due diligence. We don't do due diligence. And Bonfire takes an entirely different approach. We say, we do due diligence. We're risking our reputations, and our careers on this, because we have a conviction that there are really good projects out there, and that, everyday people might not have the time or the inclination or the expertise to evaluate them. And we're providing that service. So it's like, whereas CrowdStreet might do 100, 200, 500 projects a year, we're targeting 12. That's our goal. Right. So we really think of ourselves as an investor club.
Okay. Well, Joshua, share with us how our audience can get in touch with you to take advantage of the opportunities that you have been telling us about.
A lot of different ways. Maybe the easiest is to go to www.bonfire.capital. And there's a contact us button. A lot of different ways. Our social handles are there. I'm very accessible. If you want to email me directly at Joshua, Joshua, @bonfire.capital, I will respond.
And do you have anything special to offer our viewers and listeners?
Well, a couple of things. One is we have a phenomenal project coming along, and we're probably going to release it in the next 3 weeks. So in order to know about it, you need to be on our mailing list. And it's an asset that, at first blush, you'd say, ooh, it's office. But it was recently appraised at $45 million. There's $23 million of debt on it. And we're under contract to buy it at $18.5 million. And there's a lot of things that are highly compelling. We're buying an 11 cap. There's some things that are pretty compelling about it. And first-time customers and members of your community will get $100 off of free real estate. So just the steps would be to reach out and sign up for our mailing list. And we'll go from there.
Okay. And all that information is in our show notes. So let's go into our final 4 questions and share with us one of your most difficult setbacks. And how did you come through that time, and what did you learn from that?
A few years ago, I moved from California to Denver with my wife and our then 2-year-old. And I knew I was done with California and wanted to get out of California. But I didn't know, do I want to move to Austin, North Carolina, Colorado? I didn't know. So created an algorithm. I didn't create it. I've never written a line of code in my life. We had a data scientist who's a professor at Berkeley create an algorithm to basically predict, if I'm into these certain things, I want a good school, good weather, outdoor amenities, it will tell me kind of specific locations around the country and specific neighborhoods, and then kind of be like a personalized version of Zillow. And we built it. And that was the first version of Bonfire. And what we realized, spending some time on this and money and whatnot, is that we lack the data to really tell why someone would like a specific neighborhood over another. Like the two neighborhoods could have the exact same demographics and proximity to nature and all these various things, but there's a flavor, there's a qualitative aspect to neighborhoods that data, we couldn't find data that captured it. So it was clear that Bonfire wasn't going to work. And it was really sad. And I didn't know what was going to come next. And my co-founder, who started, 3 companies, he just had a lot of wisdom. He's like, let's just talk to our customers. Let's just listen to the problems that they're trying to solve. And when I heard enough people say, I want to own real estate, but can't source the down payment, but I want to have that as part of my portfolio, the light bulb went off, and it's just a great reminder to stay close to our community and turn lemons into lemonade.
Interesting experience there. Share with us 3 good things that you've experienced in the last 24 hours.
Well, I woke up this morning and I woke up with good health and grateful. I do a gratitude practice every morning. And my 5-year-old gave me a hug and said, I love you, Daddy. And I get the opportunity to be on this wonderful podcast with you, Alan. So those are 3 things that come to mind.
Well, wonderful. Well, how are you putting your success as an investor and entrepreneur to work to create universal well-being?
A number of different ways, and I like to do more, and I love feedback from you and your community about how I could do more. I mentor a couple of social entrepreneurs who are pretty young, but I've never kind of gone down the entrepreneurial path and are working on some interesting business ideas. And then there's people in our we have different communities. We're on Twitter, we're on Discord, on LinkedIn, and specifically Discord, I find tends to be younger people who have never owned real estate before. So I try to make myself available for at least, a couple calls a week with people who want to learn about real estate and just get up to speed and just kind of ask me anything sessions. But I do feel like I could do a lot more, and I would love ideas on how I could give back more.
Excellent. Well, imagine you have come to the end of your life and you lay on your deathbed. What do you look back on as your greatest sense of joy and fulfillment?
I think of my family first and foremost. I imagine I'd be looking at my family and saying, God, I was grateful to have been a loving father and husband and friend. And also I really aspire to be a source of loving kindness to every human being I encounter, and respect the fact that everyone, regardless of, their identity or whatever they come from, whatever beliefs they have, whatever their skin color, that we're all humans on this path. And that even when people do unkind things to me, there's usually reasons why people do that. People have had trauma, people have had difficult experiences. I don't personally believe that anyone's inherently bad. Maybe that's my own naivety, but I really try to look and see the good within and everyone and try to have compassion for all. And I fail at that daily, but that's something I'd like to look back on my deathbed and say, you know what? I did a good job. I did a decent job at that.
Well, one thing I forgot to ask you, and that is, what is your minimum investment requirement?
It really depends on the project. The last 2 have been $2,500. We had one that was $100. It really depends on the allocation and the project size and things of that nature, but somewhere probably north of $1,000 is my guess.
Wow. Okay. That is very different than a typical syndication. That is for sure. Well, Joshua, it has been wonderful having you with us. Still have a whole lot to learn about tokenization and blockchains, but thank you for trying to enlighten me.
Thank you so much. I really appreciate your questions and presence and just who you are. So honored to be here. Thank you.
Well, my pleasure. Enlightened investors, thank you so much for being with us today. As you make our show. So take a moment to like, share, and subscribe, and also leave us a comment. I'd love to hear from you. And if you could take a moment, please go to Apple Podcasts and leave us a rating and a review. Until next time, live abundantly. Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar, that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to stevetalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to stevetalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.